All right, so we'll just ask everybody just to mute yourself if you can, mute yourself, and then we'll call on people individually, and then obviously you become unmuted when you get called on. But if you're not talking, if you're not called on, please mute yourself. That would be beneficial. All right, we can get started.
All right, Alan, we're coming to you. Unmute yourself, please.
What's going on, y'all?
Good.
Can y'all hear me okay?
Yeah, I can hear you.
All right. I had a question about life insurance. I know I'm trying to be invested in the stock market, but at the same time, I only have life insurance through my job, which is like maybe about $20,000 if I pass away. I don't know if you know if it's on the job or not, but I'm not sure what to get and how to go about getting it. You know what I mean? I'm 32 and I got a 4-year-old, so I want to make sure she's straight.
Okay.
So, because I know you said something about don't invest into the stock market until you out of debt. I got about 5,000 credit card debt, but I'm working that down as we speak.
For sure. Well, appreciate the question, Troy. Can I get a pen? This pencil broke. Well, first thing I would say is that group life insurance is what you have at your job. It's always beneficial to sign up for your job's life insurance plan because usually it's like next to nothing as far as the premiums. Like you might be paying like $30 a month or $10 a month for your life insurance. So
it's not that much.
Yeah, the risk reward ratio is pretty, it's on your favor as far as that's concerned. But the downside with having that as your only life insurance is that, Magna, can you just mute it? Can you mute everybody? Thank you. The downside with having that as your only life insurance is that, most of the time it's not portable, meaning you can't take it with you. And also you're limited as far as how much insurance you can get. Usually it's like 1 or 2 times your salary. And most of the time it's usually like group term. They don't really give you too many options. So getting insurance outside of that, the first thing that you want to do is figure out, how much insurance you need. That's the most important thing. So how you figure out how much insurance you need is a couple different ways, but one of the quick, easy ways to go about it is to see how much money you make, and then you either 10 times that, at least 10 times that, or if you really want to be really aggressive, you can 20 times that. So like, let's say you make $100,000 a year. And like I said, everybody's situation is different, but on average, you probably would have to 10X that. So that's $1 million life insurance policy, right? So now you have to say, okay, how do I work my way into what's affordable to me? So now let's say you decide that you need $1 million worth of life insurance. You might have $100,000 at your job already. So now you need an additional 900,000. So then the next thing is, what's affordable as far as premium is concerned. So there's going to be 2 types of life insurance for the most part. You can get term insurance and permanent insurance. Term insurance is going to last the amount of years, like 10, 20, and permanent insurance is going to last your whole life. Permanent insurance has different names, but most popular is whole life insurance, universal life insurance. So the difference between term insurance and whole life insurance is that term insurance is only going to last for a term, 10, 20 years. It builds no cash value. Like there's no money that you save while you're paying it. So the benefit is that the premiums are lower. So like, let's say you have $1 million term policy, depending on, your health and your age, you could possibly be paying $40 a month for $1 million term insurance policy. So that's very affordable for most people. But the downside to that is that it's going to run up. And most of the time, you're not going to die within that term. Like if you're 35 years old and you're healthy, you are probably going to live longer than 20 years. Now, it's not guaranteed anybody could pass away at any given moment, but just the odds are that you probably will live longer than that term. So that means that now you paid premium for 20 years, but you don't get anything back from that. Where a whole life policy, the premiums are higher. Like let's say $1 million policy for a whole life policy, premiums might be $600, $700 a month. So that's higher, but it lasts your whole entire life, meaning it's not going to expire. And it also builds what's called cash value. So cash value, you can kind of look at it like equity in a house, where you have money that grows inside of a policy and you can actually borrow from that policy down the line. And you can borrow from it and you can use that money for a variety of different things. You can use that money to pay for your kids' college. You can use that money to, buy a car, to put a down payment on a home, anything that you want, start a business, whatever. So it's another form of savings. So from there, so like I said, so from there, you want to see, okay, what's affordable in my budget? And it's always good to work with an insurance agent, because the insurance agent will, help you with this whole process of just kind of understanding it. But usually you don't want to really go over 2.5, at the most, probably 5% of your income in insurance premiums. So like, once again, using a round number, if you make $100,000 a year, 2.5% of that would be $2,500 a year. So, if you're spending $2,500 a year on your insurance, then that should be, probably what you're maxing out at. So the 2,500 would be around $200 a month. That for most people, that should be affordable if you're making $100,000. Now, like I said, you could be making $100,000 and not have any money, or you could be making $100,000 and have $10,000 a month left over if you don't have any expenses at all. Everybody's situation is different, but just on average, because you don't want to put all of your money into insurance. You want to do other things. You want to put money into your 401k, put money into your child's account, put money into an investment account, pay off your debt. So only way to do that is to really do something that's affordable. So so then you can look at the situation from a more educated standpoint to say, okay, this is the amount of insurance that I need. This is the budget that I feel comfortable with. And then you could do, okay, I'll start off with term, and then switch over down the line to whole life, because that's one of the benefits with term, is that you can always change over, or you can do a combination of both. Like, let's say your budget is $200 a month. You can do half of it in term, you can do half of it in whole life, and that way you still have permanent coverage, but you're not spending over your budget. So that's another thing as well. You can do a combination. So it's kind of a long answer, because it's not like a simple answer to give. It's a lot of different variables that go into play. But that's some of the education that you should have when making a decision about insurance. And if all else fails, just get term insurance, because some insurance is better than no insurance. And the most important thing is to protect your family. So you have a child. So that's the most important thing. You can always figure it out later on. But, as far as the most affordable option, it'll probably be term. And like I said, you don't want to compromise your death benefit. You want to get the maximum death benefit that you can get. So yeah, that's how I look at it.
Oh yeah, most definitely. Because 200 or even more, even 600 wouldn't even be killing me in the budget, because I don't have a mortgage or I'm not paying rent, because I inherited a house in 2013. So I'm fixing on that. I know how to do construction on the house. So I don't have a mortgage. The house been paid off. When I finish with that house, I'm renting it out and I'm moving back in with either some siblings or my mom or somebody like that, where I'm collecting rent from that. And that could be whatever I profit off that after taxes and insurance and everything. That could be paying my premium. I made $60,000 last year. I drive a garbage truck, so
okay.
I'm gonna live below my means. So whatever it is, I appreciate the advice. So come Monday, Tuesday, I'll be talking to an insurance agent and see what I can get and what's really affordable.
All right, well, no problem. All right, guys. And then also, especially for the insurance and like retirement questions, if you want, so I still have my financial planning practice. I'm not actively doing it anymore, but my dad actually is a financial advisor, my sister. So I say that at least once a call. But if you want, I think Magna, if you could just put the information in the chat, anybody can reach out to them and get a consultation if you want some questions about actually how to implement different things, different strategies. Like I said, you can work with whoever you want with, but it is something that I did for over a decade and still actually am licensed, and I still have my practice. I'm just not hands-on like me personally, but still kind of oversee the operation. So if you're interested, if anybody's interested, yeah, we could put the information in there and you can feel free to reach out.